we're going to talk now about a negative report by activist short seller Spruce Point Capital Management driving shares of oat milk maker Oatly lower yesterday. At one point, the stock hit an all-time low below $20 a share. You can take a look at the chart right there. Spruce Point's report alleging Oatly has overstated its revenues and gross margins. It also claims that the company has engaged in what they call greenwashing, or giving the impression that it's more sustainable than it actually is. We should tell you that CNBC reached out to Oatly regarding the claims and received this statement in response. Before we get going even on a conversation about this, the company saying that they are aware that a short seller is making what they say are false claims and misleading claims regarding the company. This short seller stands to financially benefit from a decline in Oatly's stock price caused by these false reports. Oatly rejects all these false claims by the short seller and stands behind all of the activities of financial reporting. Joining us right now to talk about all of it is the company's founder and chief investment officer from Spruce Point, Ben Axler. Good morning to you, Ben. You threw the kitchen sink at this company. There are so many different issues that I know you believe are problematic. The one that caught my eye, though, is this idea that you believe that there are phantom sales taking place at this company. I want to drill in right there and start the conversation there. What do you believe is the problem?
Well, it's funny. We were talking about, the Chinese stocks and the lack of disclosure and the regulation that needs to take place there. Oatly's a Swedish company that was founded in 1996, and it IPOs and only provides 2 years of audited financial statements. And it's gone through 3 auditors in 6 years. And so what we did was we took a very careful look at the revenues. And what we found is post-IPO, the company filed an investor presentation and footnoted the fact that its production is estimated. Well, if the production's estimated, how can we get any comfort that the revenue isn't estimated as well? And the company does not give a lot of good quality disclosures about what's driving the revenues. To fuel their growth, they've had to give enormous incentives and discounts to get on shelves. It's brutally competitive in the beverage space, and they don't disclose any of this. So we find, evidence of revenue numbers, particularly in the U.S., being misstated. We've talked to former employees knowledgeable about this. And so we have real concerns about what are investors buying here at a $12 billion valuation, a company that has nothing proprietary other than oats, water, and cocoa and ingredients.
Look, I think there's 2 issues here, and I want to try to break them apart. There's one, which is your allegation just around their sustainability and then sort of the marketing claims. That, to me, and I don't want to downplay that, but that is an issue that will be either dealt with or not effectively by consumers, the FTC, and the like, whether people want to buy the product or not and believe it's sustainable or not. That's one issue. The other issue to me, which is actually much more concerning, if true, and I recognize it's just an allegation here, is about the numbers unto themselves. You've made an argument around market share, for example. So explain what you mean by what you think I'm suggesting, or what I think you're suggesting, is that there's effectively false numbers based on what you're seeing in terms of market share.
Well, I think it's irrefutable that they've lost market share in Sweden. That's their home market. We have data on that. We know that. The company stopped disclosing their market share numbers in their foreign Swedish filings. So I think that's a fact. What I think investors don't realize, and what we're seeing evidence of now that they're public, is that we believe they're starting to lose market share here in the U.S. And the U.S. is a big part of their growth story. It doesn't take a lot of work to do channel checks, to go into supermarkets, to go into cafes, to go see where it's being sold, that they're losing shelf space because they can't supply the market. And competitors like Chobani and Planet Oat, Silk, that's owned by Danone, they're not going to sit around and wait. They're discounting prices heavily to gain share. You can also look online, go to Amazon. I encourage you to go to Walmart, to Albertsons, go to Kroger's. We've been tracking this. We've been seeing that they've been losing promotional share on the website. We see that the prices have been coming down. So I think that's part of the story that people don't realize, that this is a busted IPO, and it's still trading above its IPO price at 17.
Shepard Smith here. Thanks for watching CNBC on YouTube.